Good evening, good evening, good evening. Welcome to day two. I'm so glad that everybody joined yesterday. I'm glad for those that will join today and already are on the live. I wanted to take today to talk about business accounting. Okay, some people don't like to talk about business accounting because they think it's like a bunch of stuff. But business accounting is the best thing that you can know about your business. So let me stop because yesterday, I want to clear up something that I said yesterday about military retirees in the state of Virginia. Let me do this first before I get started because this is on taxes and today we're talking about something else. So I actually want to clarify, okay, for what I said yesterday because I said that retirees did not have to pay taxes on their retirement income in the state of Virginia and it was starting this year. Actually, what it is that they implemented back in 2022 that all retirees over the age of 55 and up would start getting a $10,000 deduction on their retirement income starting in 2022. They what they did is that now they are in the second year. So the second year, if you're 55 and over, you can get 20,000 off of your retirement income for this year. But next year, well, this year in 2024, they are allowing all retirement income to come in at the 30,000. I think it's 30. No, it is 30,000. That they will be able to write off $30,000 from their retirement income. So those that do not receive over 30,000, all of your income will be written off. But those military retirees that do get more than 30,000, they can write off 30,000 of that money in their state taxes. So I wanted to clear that up from yesterday because my husband brought it to my attention. I read it and got excited. So therefore, now I need to not get excited and I need to read it in a little bit more. But I wanted to clarify from yesterday of what I said. So now I really want to go forward into business accounting. This is one of my loves that business owners know what's going on in their business. That's the number one thing for me. I really think that small businesses, when they when they first come in, nobody really knows, how businesses really kind of run. We really start businesses on our passion. So what I really want to do is really kind of come in as a partnership to a business. I never really, believe it or not, I never want to go into a business, and this is something that I do on a regular. I never really want to go into a business and just do everything. I actually want to teach my clients as I go. So this is something that I'm implementing in this year because I'm going to make classes on business accounting so that my clients and those who need the education can understand what they need to do in their business, but also just different tips to help them along in their business. Because when you get to talking about financial reports and different things like that, a lot of people don't even want to even think about it. Some people, I've talked to some people and they're like, well, we'll just have you do it and we're not going to worry about it. But actually the thing is that it's amazing that business owners know exactly what's going on in their business. So I wanted to take some time today to go over just a couple of items that will kind of help business owners with their business. And even if you're not at the point to where you do financial reports or even thinking about it in your business, I actually want you to think bigger in your business because even if it's on down the line, at least you can say, I've seen that before and I know it. Okay. So even after this live, if anybody wants the slides that I'm going to show, I really would like for you to just email me and say, send me the slides, because I try to put enough information on here for people to be able to go back and at least understand what they're looking at when their business get to that point, to say that, okay, I really want to run my business by the GAP principles. Okay. And what GAP principles is just generally accepted accounting principles. Okay. And so the thing is that once you start running your business in that way, you will start seeing a little more clarity than just a profit and loss statement. And so we're going to go over the profit and loss statement too, but I really wanted to get, I would say it's almost elementary, but it's not elementary to some people. So I'm going to go over what cash versus accrual is, because I've learned that a lot of people don't understand what cash versus accrual is. And I came with a couple of examples. So I'm going to minimize myself and I'm going to make the spreadsheet bigger. So today we're just going to talk about accounting, things that we can do in our accounting. And actually, these are things that you need to do if you have a business, even to grow your business, or this will even get you to a point to where when you get your taxes done, all of your things are in order and things are in place. And those are the things that I'm going to talk about for today and tomorrow, because it's good to save on taxes and different things like that. But if we don't know where our money went through the time, through the year, then we're trying to think of something, and sometimes we're trying to think of everything that everything that we've done all at the end of the year, and then that's not going to help us. Okay, so cash versus accrual accounting. So what I'm going to do here is kind of let you know, okay, this is how this works and this is how this works. Most businesses are on a cash basis accounting. Okay, IRS already knows small businesses. They actually most of them don't know what accrual accounting is. Most of us kind of, let's say, are on the borderline, because sometimes we have invoices that we have sent to our clients, or somebody has sent you an invoice that you hadn't paid. That's really, once you see it in the system and you haven't paid it, it's almost going into accrual accounting, but at the end of the year, you don't account for it. So that still makes you cash. Okay. So let's say if you are dealing with cash basis accounting, your revenue recognition is only, you only recognize revenue when it is received. Same with expenses. Cash basis accounting is the easiest accounting. That's why people do it. Okay, it's the easiest accounting because you are only capturing when it's done. It makes some people not know how much cash they have, because they're going so much on, this is what I have right now, and I spent this much, and that's it. But we don't plan ahead with cash basis accounting, and that's what hurts us. So let's say credit account. Okay, no accounts receivable and no accounts payable. They don't even look at that in cash basis accounting. But in accrual accounting, you do have a receivables and a payables, which receivables is money that people owe you, that you keep on your books, and payables is money that you owe to someone else. Okay. Taxation, not paid for cash that hasn't been received. When you do your taxes, if you have not received the money, you don't count that in cash basis accounting as you have received it. Okay. In accrual accounting, any money that's owed to you, you count that money as it's coming into you and it was due that year, because you're accruing it for the year that you were supposed to receive it. Accuracy. Cash basis accounting can exceed the financial wealth of a business. cash basis accounting can make you think you have more money than you really have sometimes. Because if we're not counting all of our bills, then sometimes sometimes you forget about a bill. Sometimes if it's not on your books, you'll be like, okay, I forgot all about I owed that. So cash basis accounting makes it easy for you to forget money is there. Accrual accounting provides a more accurate representation of your profitability because it's already in the system and it has to be put in the system in order for you to accrue it. Okay. Easy to use, simple and straightforward is cash based accounting, but it is not as popular. Okay, and it's not as popular because people always trying to because it's easy and simple and it's easy to lose money in that way. I'm really trying to switch some of my customers to accrual based accounting. I'm just kind of easing them along a little bit, but at some point we're going to get there. Okay, so accrual based account basis accounting is a bit more complex but widely used. And it's widely used because it has order to it and it keeps things to where you can see it right in front of you. And we always want our businesses to run in a way so that we know the things that are happening and we know the things that are going on. So therefore, we're not hit with something that we don't know. In cash basis accounting, it's like you're always trying to catch up and you're always trying to see what's happening in cash basis accounting. So therefore, it makes it hard. But people that use it, they know small service based businesses use it. Some nonprofit organizations use it. The nonprofit organizations that I work for, we use accrual basis accounting because most of the time we do audits. And so audits, I have a company that we do audit. We do an audit every year. And that's just to keep everything straight. Sometimes you want to have an audit, depending on how big your business is, to that it's always, I think of it as accountability. When you have accountability, the sky's the limit. Okay, because people will trust you, people trust your financials, and people will trust what you're telling them. Okay, so I wanted to go over that because a lot of people don't know about cash and accrual accounting, and I wanted to make sure that I kind of get that out there and kind of explain it. So the next thing we're going to go to is reading financial reports. Now, this is the report that everybody knows is the easiest report that you will ever look at, and it's easy to read and it's easy to compile, basically, because actually you can compile this on a spreadsheet if you want to. I actually have a profit and loss spreadsheet that I usually give to small business owners just because they may not need to go into a system starting off, because sometimes we pay money and we think that sometimes people think that QuickBooks is their accounting, but actually the thing is that QuickBooks makes mistakes too. Okay, so therefore you have to always watch even the systems that you put in place, because everything is not as accurate as it should be until you get it to that working level that you need. Okay, so a P&L statement shows a company's revenue and expenses related to running the business, such as rent, cost of goods sold, freight, and payroll. Each entry on the P&L statement provides insight to how much money a company has made and spent. This P&L statement is what most companies give to their tax accountant or somebody that's doing their taxes at the end of the year. This is the easy statement for people to look at and to know really how much they spent, how much, and even in areas where you have spent too much. This is the easy statement to look at to say, okay, we need to cut back, or even when you get your taxes done, this is the easy statement to give to your accountant. So therefore, they know what your business is doing and how much your business made. So before I go to the balance sheet, does anybody have any questions? Are we good? Because you can ask me questions going forward, because when I go to the balance sheet is a little more tricky, because this will probably be the easiest one that you will look at. Okay. So a balance sheet is a financial statement that reports a company's assets, liabilities, and shareholders' equity. The balance sheet is one of three core financial statements that is used to evaluate a business. It provides a snapshot of a company's finances, what it owns and owes at the date of the publication. So what I put on here was a cash basis balance sheet versus an accrual balance sheet. Okay. I'm used to working with accrual balance sheets, but a lot of people look at a cash basis balance sheet, and that's because most people deal with cash basis, and the cash basis is the easiest one. Okay. Because all it really tells you is actually what you have right then, what you have in your checking account, your savings account, what you have in petty cash, if you have a petty cash in your business, your liabilities, any sales tax collected, or any liabilities that you own your books. Okay. Owner's equity, net income. All of this, the net income is, believe it or not, I'm going to talk about it once we get over here to the accrual basis, because I kind of put these explanations by each one so that you will know what each account is on a balance sheet. And what I am going to offer is, after this live, what I'm going to offer is, if you like, I think I said it at the beginning, if you want a copy of these spreadsheets, just email me and say, send me a copy of the spreadsheet, because I want to go back and look at it, and or just have it for FYI. And it'll help you along, even when you're looking at, when you get to a point to where your balance sheet is a little robust. It may not be as robust as, I know it's not as robust as this right now, but the thing is that we all want our companies to grow, and we want them to be successful, and therefore we want to get ready for when our businesses do flourish and grow. So therefore, what I want to do, let me ask a question, because I think my husband just told me YouTube is not working. If you're on YouTube, can you send me a message if you can see me or hear me, or if something is wrong? Okay. Or if you want to use the StreamYard link, you can come over to the StreamYard. Okay, I have one person that says yes, it's working. So I really wanted to kind of, okay, thank you. I really wanted to kind of go over the accrual balance sheet side. So therefore, you will just kind of know how a balance sheet works. Looking at the cash basis is so simple and easy. You don't really have to worry about that when you have it. Okay. But when you get into the accrual side of your business, and believe it or not, I pray that every business flourish enough to where it gets to this point in business to where you're into accrual accounting and you're following GAAP principles and different things like that, because that's how your business stands firm. Okay. So let's look at the first, cash and cash equivalents. This is all of your bank accounts and your cash that's available in your bank account. Okay. Your bank accounts, investment accounts, all of these are your assets in your business. And when I say assets, these mean things that you own, things that are in your possession, things that you have paid for. Okay, your investment accounts. This could be if your business owns a Fidelity, an account with Fidelity, and it has shares and different things. This is where you put this account. You put it in assets. These are assets that your company has. Accounts receivable. This is money people owe you for invoices that you have done. Okay. Inventory in your business. In your business, if you have supplies that you are selling people or anything of that stature or magnitude, this is your inventory. This is the supply. Inventory is supplies that you haven't sold yet, but it's still in your inventory, and those are your assets. Okay. Prepaid expenses that you have paid before they are due. This is, let's say that you have an insurance policy on your business, your general liability insurance. Usually you pay those for a year. So because you paid it at the beginning of the year, what you can do as far as accrual accounting, you put it in prepaid, you put it in your prepaid expenses, and each month you take it out. So each month you do an entry to take it out to put it in your regular expenses. Okay. But it's a part of your assets because that's something that you have already paid for your business. Okay. Fixed assets. Assets such as big items that your business owns, furniture, computer software, machinery, different things like that will go under your fixed assets. And this is what I talked about last night when I talked about sometimes you can depreciate, some businesses decide to depreciate their items that their business own. This is where this goes. Okay. And so what you can do, I've done it different ways. You can depreciate each month, you can depreciate each quarter, or you can depreciate each year. It depends on what you want to do in your business, but it's all an option. Okay. Security deposits. If you are renting a space and you have paid a deposit to someone, it stays as an asset until the lease is terminated and you receive your money back. Although your rent payments go as expenses, because you pay a security deposit, the security deposit stays as an asset because that is money that you will get back. Okay. So these are your total, all of these items add up to your total asset. Is everybody understanding me okay? I'm trying to explain it clearly, and I really want you to understand this. This is something that I love. So this is one of my things that I really, really like. I love financial reports. Okay. So I'm going to move on to liabilities. The liabilities in your company. A couple of years ago, they gave PPP loans, EIDL loans, different things for companies to, let's say, to stay afloat when we were going through the COVID season. So I just made this balance sheet as someone that had an EIDL loan. The EIDL loan was the loan that you have to pay back at a low interest rate. So if you had an EIDL loan is on your liabilities, okay, because you have to pay that back and you will be paying down on it. So in accrual accounting, I should have said this at first, you can compare, it's easy to compare years when you do an accrual accounting because most of the time you want to know how your business did from year to year. So dealing with accrual accounting, you can go back to each year and it will kind of look the same, or in this case, you will see that the loan is being paid down from where it was in 2023. And so it gives a truer account of where the loan sits right now. So notes payable, if you have a line of credit with someone and you need to pay that back, that needs to be on your books. A lot of people with cash basis accounting, a lot of people don't even put it on their books. But it's good to have it on your books because it's good to know what you owe people. That's the best thing to know when you get down to how much money your business has, because you don't know how much money your business have if you don't even know the bills that you have from a month-to-month basis. So accounts payable, these are bills that you owe to someone else. It's good when a business have, not saying it's good when a business has payables, but it's good when a business can go to, when you can go to someone as a business and tell them to bill you. When you have someone that will put you on terms, net 30, net 15, or something to that effect, it helps your business down the line, because you don't have to pay all that money right then, and you may have to get money from your customers. So keeping an accurate account of the bills that you owe is an awesome thing for every business and every business owner. Um, let's say accrued expenses. Accrued expenses in this case, because I kind of use something that I use all the time. In this case, is the interest from the idle loan. And so these are accrued expenses because it's something that will be paid as well. Okay, so this is something that will go out to deferred revenue. And we will wonder, why would deferred revenue be in liabilities? Because actually what deferred revenue is money that people paid you now, but it actually really shouldn't even be in this year. They paid you ahead of time, which is money that you will have, but you will have that money to start off the next year for your business. So yes, you will. Let me say this, and let me put this out there. Yes, you will use the money for your day-to-day business, but in accrual accounting, that's really not money that you can account for right now, because they paid for it early, and you won't do the services until next year, or they won't get what they want, get what they need from you until the next business year. Okay. Is everybody tracking with me so far? I haven't lost anybody, have I? Okay. So let's talk about what the end, we're coming down to the end of this report. Fund balances. Fund balances is an accumulation of revenues minus expenditures. This happens over the years. Okay. So this would also be in the line of owner's equity. So this will be like when you first start off your business, you will see this at the end of the year. Then it will accumulate until the next year. But it will be the same, it will be the same way of getting it, but it will just add on or either deduct if your business lose money. Okay. Your current year earnings will be where your company is sitting right now at this point in time. Your current year earnings will be the same as what's on your P&L. They should always match. If they do not match, then you have a problem somewhere. Okay. So this is something to think about in going forward and looking at business statements or anything like that on a balance sheet. Your total assets will always be the same as your total liabilities and net assets. If they are not the same, you have a problem somewhere as well. So I actually love a balance sheet because I can look at a balance sheet and I can tell where a person's business is. Or if I look at a P&L, I can tell, okay, do you really, and I can really ask questions. Do you really need to be doing this or doing this? But this is where we all need to be in our own businesses, because we can't always depend on somebody else to tell us, yes, your business is doing good, or no, it's not. We want to know for ourselves as business owners. That is one of my biggest passions, that we know the functionality of our businesses, and we know that our businesses are profitable, and that what and the things that we need to do in order to make it profitable, because we want to make sure that even if somebody come along and look at our books, that they're looking at the right thing, that everything is in order and we're running our businesses in order. We want to know, and I can't stress this enough, we want to know, as far as business people, that our business are striving in the right direction. I think I said it last night. If our businesses are, each year we're always losing, then it's something that we're doing wrong in the business, and we need to reevaluate what's going on. My heart's desire is that every business prosper, and that everyone that even think about a business, that everything is put in place for them to strive. And that's the reason why I do these classes, and that's the reason why I really want to push that business owners know what their financials are doing before they even get an accountant. And although I am an accountant, yes, I come to help, but I want to work in partnership with someone, like I said before. I want to work side by side with you, that we both can work together to build your business, and to make, show that your business is growing. I'm just here. I tell my people all the time, I'm here to help. I'm here to help elevate and help you grow to where you need to be. So therefore, if you know your financial reports and different things, and it's just order, it's just, even the things that we're going to talk about tomorrow, it's just a matter of things being in place. And I guess I talk about order so much. Order needs to be your paperwork, everything needs to be in order. So the next report is the cash flow statement. This I did as a simple. When I say simple, it's so super simple. I thought it was amazing that I even found it. Okay, that a cash flow statement tells you how much cash is entering and leaving your business at a given time. So in this cash flow statement, this is so simple, okay? And I'm gonna just kind of walk it through. It says operating activities, sale of lemonade, okay? Sale of lemonade, they made $1,000. But when you're thinking about business, you're thinking about everything that it took to get to that point, okay? Your payments to employees, how much you had to pay people to work for you in order for that to sell. Your cost of goods sold, how much did you pay for the lemonade? How much did you pay for the items that you had to mix together to get that lemonade? Interest payments on what you had to pay. So once you take that total, that's the total. You're investing in activities. You had to purchase the stand. This is almost like your assets. You purchase the stand, you purchase the blender in order for it to be made. All of this will be taken from the money that you made. You got a loan, you got a small business loan. That will be added in because that's money that you brought back in order for you to make more money. Okay. So then it made the net cash. Let's say this ended in 390. Investing activities that took 250 from it, but you went and got a business loan, so that covered that 250. So you at 390 of what where your cash flow is. So that's what you have. Okay. So a cash flow statement, most people don't even look at cash flow statements unless you are a big business. I just wanted to kind of go over it to give you an idea or a thought from when you get to this point. Okay, I know that all of these activities kind of go in it. You know, who you pay, how much you pay for the goods. Everything goes into play when it comes to a cash flow statement. But this will not even match your P&L. It will not match your balance sheet, you know, or anything like that. This is a statement on its own, but it's usually used by most big businesses, um, businesses that have a lot of activities, but mostly businesses that do accrual accounting. Okay. The last thing that I wanted to talk about, I thought this was funny because this is like an old school bank reconciliation that people used to use probably back in the 80s. Okay, when they used to balance, this is what people used to do when they used to kind of balance their checkbook and different things like that. So I thought this was really kind of funny to use as far as to talk about reconciliation. This could be reconciliation. When I think most people think of reconciliation when they think of bank reconciliation. I think of bank reconciliation because I do audits most of the time. So when I go through an audit every year, I reconcile accounts. So one of my clients that I work for, we do an audit every year. I have to go through and reconcile their accounts, not only their bank accounts, their accounts that are on their chart of accounts. I go through it. Most of the accounts are from their balance sheet, but it's good to always go through and look at each account, even if you have somebody working for you. It's always good to go look at your rent account, QuickBooks, or something to that effect, to where you and somebody else are doing your books. Go back, look at your accounts to make sure things are in the right place, because sometimes when people are doing work for you, they know where it should go, but it's not all, they know where it should go in their mind. Let me put it like that. But it may not be where it needs to go in your mind. So therefore, sometimes things need to shift and they need to change. Okay. In bank reconciliation, what this is that you're going through and doing a bank reconciliation each month with your account. When you have a business, this is actually key to business because it helps things keep on track, and then it helps you know what you're spending and what's out there. Most people in business don't even kind of, they look at it from time to time, but let's be honest, most people don't even go reconcile their bank account until they get to a point in their business to where they say, I think I need an accountant because I don't know what I'm looking at, or things just kind of got out of hand. I think when I first started my business, a lot of people came to me and they were like, I haven't looked at it. It's in the system, but I haven't looked at it. And we need to go back. And so going back and reconciling over time. But if we do it on a month to month basis, even when you're small, even when your business is small, please do not take bank reconciliation and different things like that as a just fly. Because even when you're small, you need to reconcile your bank account for your business. You actually need to reconcile them for you personally too, because it might be stuff out there that you didn't even know was out there. This, when bank reconciliation and things like that, this is where things are found. To where you say, okay, I don't know where that charge came from. And sometimes we can't even remember the charge. So therefore, once you reconcile and you make it a habit, I think that it becomes better. And so I'm rambling. So let me stop. Okay. So let's look at this bank reconciliation. What it has is the balance, the bank balance of how it started. It started at $200. This is actually how a bank reconciliation goes. They spent $15. So therefore the bank balance went down. They sold two items. The bank account went up. They end up spending a drawing, envelopes, web post fees, chair, bought a chair, and they brought their balance all the way down. But it's not a matter of the bank balance, it's a matter of looking at your expenses and your income to make sure, yes, I did this expense. I know what this is. Yes, this is exactly what it is. Because we want to make sure that everything is in order. Now we're in a new age. We have QuickBooks, we have different things like that that we can use. But even when you don't have it and you have a simple profit and loss statement, it's easy to just put it on your spreadsheet. Put the amount that you spent on your spreadsheet. Tomorrow, what I'm going to do is part of the accounting system in Excel spreadsheet. I'm going to show you what I usually give small businesses for a profit and loss when they haven't got to the point to where they need a business. And we're going to kind of go through it. So therefore it'll help you kind of move along. And then if you need the spreadsheet, all you have to do is reach out to me and say, yes, I want the spreadsheet. Okay. So I believe this is my last thing that I wanted to talk about today, account and bank reconciliation. If anybody have any questions, when I say any questions, I mean any questions, even from yesterday, you can ask them now or forever hold your peace. I really want to thank you guys for being on today. I appreciate you. And if I can answer anything as far as business, business, business moves, anything that you need for your business, I know this is the end of the year, so therefore I know we're in tax season with our businesses. But I want to make sure that you can even provide the right information to your people when they come to you for business, you know, for business advice, or even when you got to give your business stuff to your accountant. I want you to know that your stuff is in order and the things that you give them. So are we good? Everybody okay? I don't see any questions on the YouTube side or on my StreamYard side. Okay. So I hope this was good for you guys. And what I really want, if you want this slideshow, and that's just because I put the little explanations on it, please email me. My email is right here. Or you can go to my website and reach out to me. And what I will do is, okay, Miss Sydney, I understand. We will talk, okay? So you can reach out to me. I will send this out to anyone that needs it or wants it. My clients, we will talk about it in the coming weeks. Okay, so if nobody has any more questions, I pray that you guys have a blessed evening. Okay, and if there is anything that I can do for you, please reach out. Tomorrow we will be talking about accounting systems or Excel spreadsheets, whichever realm that you are in right now, separation of personal and business transactions, which is one of my pet peeves, documentation systems for your financial health of your business. It's good to have a financial, it's good to have good documentation for your business. So we will talk about that tomorrow. And I'm guessing this is the end of my live. If no one have any questions, I pray that you guys are blessed. Have a nice evening, and we'll talk to you tomorrow. Bye bye.